Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to the show. I have with me the top management of a global marquee private equity firm, Warburg Pincus, which has assets under management worth about $44 billion globally. I have with me Charles Kaye, the co-CEO of Warburg Pincus, popularly known as Chip, and Vishal Mahadevia, who heads the India business of Warburg Pincus. Gentlemen, so good to have you on CNBC TV18. Now, Chip, starting with you, since you're visiting India, you're a guest for us, and you know, your firm has been one of the most aggressive private equity funds that the country has seen. How has the last year been? Take us through the highlights of the activities.
Sure. Very good to see you again. Thanks for agreeing to do this. You know, last year was, as you referenced, I mean, we've had a long history in India. It goes back more than 20 years. So we've seen India really develop and shape over a long period of time. And last year was a particularly special one for us. Portfolio has continued to do quite well. We see differing versions of it, and as I'm sure we'll talk about, all kinds of you know, macro noise and the like, but we've had a pretty constructive view on things here and have seen it play through in ways that have been largely quite beneficial to our portfolio. So it was a really good year from a performance point of view for us. At the same time, we invested or committed probably close to $1 billion last year. So, you know, in what I think a lot of people think of as not just in India, but globally, you know, crowded markets, more complicated markets, we found a handful of really interesting things to do that play to the themes that we pursued in India for quite some time.
Right. So, Vishal, how much of the global portfolio have you managed to really channelize towards India? And how much is the assets under management? Is the pace of investments really increasing?
So, Nisha, we've consistently been increasing our pace of investments in India, as you're aware. And I'd say out of the total global portfolio, India is close to 15%. It moves obviously up or down over the years, but over the last few years, we've consistently invested more and more. And last year, we invested and committed more than $1 billion to India alone, which was the single largest year of investments for us. We continue to be optimistic and hope to see that pace continue at that rate or even increase over the coming years.
What's the likelihood, Chip? Is it going to increase? Also, you've visited a large part of the country now. And in this visit, what has been the biggest takeaway? Of course, GST reform as well as demonetization. These were the big hallmarks of our reforms last year. What is it that catches your attention now, and how will it define your decision?
Policies of the last few years, as you referenced, you know, demonetization, GST, some of the changes in the banking sector, you know, have some growth inhibiting or growth challenging elements to them in the short run. Long run, they all feel quite good. And you've got to work your way through those issues over time. But I think that's a vision of what India's been like for some time, which is always, you know, this sort of steady march forward, albeit with lots of turbulence along the way. And capital like ours that's prepared to come in, find the talented person, stick with him or her over long periods of time and build a real business has been a successful way to play things there.
Oh yes, you have always focused more on the micros than the macros, so specific companies. So in that way, Vishal, which are the sectors that we are hot on right now?
So there are a few that we've been very active in, and we'll continue to be active in. Financial services being a large part of them. You talked about demonetization, you talked about GST. It also led to UPI. The payments interface. And when you think of technology and you think of financial services, there's a whole wave of change coming. So we'd like to be at the forefront of that. We've played it through Capital First, through AU, through ICICI Lombard, and we'll continue to play that going forward. I think on logistics, as you think of the digital economy and you think of the rise of e-commerce, someone has to move all those goods and services. And you look at companies that are disruptive in the logistics space, providing a better cost-efficient solution. We're playing logistics in a big way. So, and consumer and retail, as you know, has always been, and one of the things Chip mentioned, as you think of the shift and formalization of savings, you've also got a formalization of the economy, where consumers from buying unbranded goods, they're happy to buy branded goods, that are a better value proposition.
Right.
And as more and more of that happens, companies like Abiba, Kalyana, PBR will continue to benefit. So we play some of those themes.
All right, so these are the themes that you're playing on, but a large investment recently made ship by Warburg Pincus in India was again in Bharti Group. Now, of course, your biggest investment, best returns have been in the past from Bharti Airtel. Now you have made a big investment and a big bet on Bharti DTH. So are you really banking on playing the same Bharti magic all over again?
Well, I'd say a couple of things. You know, one, Vishal talked about sort of the consumer trend being one that we've played over the years, including in Bharti originally and more recently in things like Kalyan and Biba and others. And Bharti DTH in that sense is a play on that same theme, that rising consumption, access to high quality entertainment. You know, obviously it is, you know, special for the firm and for me to have the chance to work with Sunil again. He's someone that I got to know well in the late 1990s. He's always typified to me what is the true spirit of Indian entrepreneurship. And I think for both of us, we're going to try to see if we can find that magic again.
All right, so Bharti Group magic on the other side, it's the relationship and the kind of trust that you've built over the years. But Vishal, you know, overall television is considered to be a dying medium. I hope not here at CNBC TV18, but that is considered. Now, what is the main strategy and the philosophy behind investments in a DTH kind of a play? And does it also mean a further consolidation? How do you see the future of this business?
The good news you and I can agree on is I don't think television is a dying media, particularly in India. In fact, I'd even go one step further. We were investors in a company called Dainik Bhaskar, which was print media, as you know. And at that time, print media was dying all over the world. Print media in India continues to be alive and kicking, so forget television. We think television will be there for a long time. I think the way television is distributed is changing quite dramatically, from analog to digital, partly because of the government push to digitization. And when you think of India and Bharat, which is the parts of India outside of Bombay and Delhi and Chennai, those areas to get to by DTH is really the most cost-effective and sensible way to do it. So that's really the thesis. There's a lot more factors, but we're excited about it.
But more consolidation on the back of this particular investment can be expected or no?
Anything is possible, but with or without consolidation, we think there's a tremendous opportunity for Airtel DTH to grow, to create a great customer value proposition and create value for everyone.
You at length spoke about the consumption theme, which every private equity is really betting on. And financial services, because of the financial inclusion, demon effect, consumption, all put together has become the hot sector again for all the private equity players. And you've made some fair bit of investments. Let's start with Capital First. And that has seen a large transaction with merger of IDFC Bank and Capital First. And market understanding as per the merger swap ratio is that it is in favor of Capital First shareholders. Are you happy with that kind of a return? And what is your way forward in that investment?
Capital First is one we're quite proud of. We acquired control of it from the Future Group behind Vaidyanathan, really transformed the NBFC from a wholesale-oriented book to a very consumer SME lending one, built a really robust franchise. And in some ways, the opportunity now combined with IDFC Bank is the chance to take that to the next level, chance to create a bigger platform, to essentially combine the strengths of both of the institutions and create something larger. And I'd say, you know, from an economy-wide point of view, India has need for more bigger financial institutions that can underpin its continuing economic growth. So it's a story we like, and in some ways, this merger is our reinvestment in that story. And so we're quite excited about it.
So for that to happen and to have a more supporting role in terms of really taking Capital First IDFC Bank merger to another level altogether, Vishal, do you think that a board seat is something with 10% stake that Warburg Pincus will land up holding in the merged entity? Is that something that you're really looking at?
I don't think that the transaction is not contingent on Warburg having a board seat or anything. I would actually look at it, if I just step back, a couple of questions you asked. I think really you have two complementary businesses, and you had Vaidya and Rajiv on your channel and your show, and you grilled them already, so I don't want to repeat what they said. But to be honest, as Chip said, the opportunity to build something special, I think is fantastic. As we look at it, we want to be supportive shareholders, supportive investors, and for us, it's really a reinvestment decision. You talked about the swap ratio, so I'd just give you an interesting story. I've spoken to a lot of shareholders on both sides, and there's a bunch of them that feel Capital First didn't get a good end of it, and there's a bunch of it that felt IDFC Bank didn't. So what that probably means is it's a fair deal.
Are you
as I
happy
think
as an
about it.
investor with the valuation? That's all I wanted to ask.
So to be completely honest, I actually think the swap ratio is not relevant. What we think is relevant is the opportunity to put these two complementary businesses together and create something that is multiples of where it is today. So, I mean, if you ask me as an investor, I'm thrilled with Capital First as it was. Vaidyanathan's done a great job. This is not, I just want to point out, it's not an exit for us. To Chip's point, it's a reinvestment. So for us to stay in this and own 10%, we have to be prepared to say, we're in here and we think the next many year story is exciting for us to make multiples from where it is today.
So no exit on the horizon even in a couple of years is what I wanted to check?
A couple of years is, I mean, it's impossible to answer now, Nisha, but that is not the mindset we have. Going in, the mindset is not a couple of years mindset. It's a mindset of it will take time to build this institution. And as long as the opportunity is there and the value creation is there, we'll be there with it.
And just one more regulatory aspect, to be at 10% and above, you need RBI's approval. Do you have that already?
No, we'll apply to RBI for permission to go from 5 to 10%. As you know, in the past, RBI has been open to providing that to fit and proper investors, but we'll go by the directions of RBI.
All right, so that's a large transaction in the making, and that gives you footprint into the banking space as well. But Chip, you've been talking about the insurance play as well, and that's somewhere that a big investment has already been made by Warburg Pincus, ICICI Lombard. Now, how do you see the insurance sector developing? And there are so many opportunities available. Is that where you're going to find your playground for deal activities going forward?
I think it's a piece to the puzzle. I mean, as I said earlier, I mean, you know, financial services is an area we have always been invested, and I think if you look across the board, it is, you know, the Indian sector is still quite underpenetrated.
Yes.
And so across the financial services landscape, insurance included, you know, we've been in the life insurance previously with Max. We're now in the general insurance business with ICI Insurance. We're looking at some other spaces. So it's a sector we like. And to some degree, by having a series of investments across the financial services landscape, you know, it gives us the ability to benefit in aggregate from sort of that rising tide, if you will. There's always, you know, sectors that go in or out of favor or regulatory change at the margin. But as I said, it's probably it's a sector that has been core to us from inception. So the answer is yes, it's one we're in and continue to do more in.
And also, Vishal, that gives you a platform to expand further in the insurance, general insurance space. There is a deal activity going on. Star Health is up there. Your name appears along with ICICI Lombard, in which you have an investment. So is that going to be a really hotly contested battle, so to say?
So I can't really comment on Star Insurance per se, but I do think over time, there will be strong players that emerge in this sector, and we think ICICI Lombard, who's already a leading private general insurance company, will continue to build on its foundation, both organically and inorganically, whether it's Star or whether it's someone else. But to comment on which particular transaction would be hard to do.
And you want to spread to other insurance plays as well, like even in life insurance, India First is up for sale, stake in that. So that's also somewhere that you are looking. So is life insurance also something that you find equally mouth-watering at this point?
Yes, mouth-watering is a strong word, but we do think across financial services, there's a lot of opportunity. I'll just step back to one point Chip made. We're much more micro-investors, Nisha. So I think life insurance is interesting, general insurance is interesting, but why ICICI Lombard? It starts with the ICICI Group and Bhargav Dasgupta and the team that's really building it, just like it was with Vaidyanathan. And in life insurance, we will want to invest behind who we think is a terrific team and an opportunity, because the macro and the opportunity is going to be there for a long time, and then it comes down to who's got the right strategy and who executes better. And so that's really where we have to take our calls. We'd love to find teams to back and entrepreneurs to back in the space.
Even
One thing I'd just add to that, maybe Vishal wants to take off, is we've talked a lot about some of the more traditional financial services spaces, which we like and continue to invest in. But Vishal referenced earlier, one of the areas we're paying a fair bit of attention to is what's happening in the payment space. And the changes afoot in and around UPI and the like, and what feels like might be a really, maybe, world first in terms of creating a low-cost utility payment function that can get exploited by a variety of actors across the spectrum is extraordinary. Both what's happening in private sector, in the banking community, and with government help. It's one of those sort of efforts that, it's happening as we speak, and I think is an area of particular interest for us, and is a place where essentially, as we've seen in other spaces, India may have an ability to leapfrog what we have seen elsewhere in the world, and really create some novel, interesting businesses. And I'd highlight it as an area that we're sort of particularly focused on now.
What is your view on the real estate sector in India with the real estate regulator now coming in, and you've made a fair bit of investments in Piramal real estate as well as Embassy Industrial Park as well. So how do you see this? Is more money coming in for this sector as well?
Play that we think over time will play here, whether that's hospitality, as we've done historically in Lemon Tree as well here, or whether it plays into the mixed-use commercial office, suburban office park, warehousing, logistics, and on. There's a series of sectors, data centers. There's a series of sectors, and we've sort of seen elements of that movie because we've seen it play in other parts of the region. And in some ways, it feels like some of the blockages and challenges that have existed here are beginning to release. And so that's a sector we're excited about. But to Vishal's point, that's particularly one of those sectors where you have to have patience and sort of let it mature over time. But it's very much on our radar screen.
Right, so a whole of infrastructure, but real estate very much on your radar, Vishal. Where are you spending most amount of time? REITs plays also something you look at?
We look across the space at the real estate sector. So I think it is a big opportunity, both REITs, commercial, residential, across the country, affordable to urban. It's so underbuilt that there's opportunity everywhere. What we are looking for is the right entrepreneur.
Vishal, you've also dedicated a lot of time on some of the exits from in the IPO market. Like most of the other private equity firms have taken advantage of the higher valuations. Now with markets really dwindling, looking more volatile than earlier, and also LTCG coming in, how has the IPO market exit scenario really changed for you as a private equity investor, and is it still attractive?
I think the market continue to remain attractive. To answer the second part of your question first, I think as I look at this coming year, as long as you have a good company and the bar on strong companies, high governance, proven track record, the IPO markets and the money flowing into the markets will continue.
Right.
But I think the bar will get higher, the markets will be volatile, and so I think as long as you have good companies, there will continue to be an opportunity to exit through an IPO.
Right, so you are in the process of Lemon Tree and Kalyan Jewellers going to the market. Now, Chip, from the outside world, of course, one big change that has happened, which has really brought down the PSU banking space valuations, has also been the fraud case by Nirav Modi's company, and that's the hot topic of discussion. How do you post that, change of mindset about India, and also the jewelry sector in which you have also invested?
Look, we're quite proud of the entrepreneurs we've done business with. As Vishal has said several times, we try not to get lost. We have points of view about sort of what's happening in the environment, try to be constructive and helpful, sort of good corporate citizens, good corporate investors when we can. But our job's to really live below that, and to go find those uniquely talented people that can create things that survive that turbulence, and that ultimately put forward the value proposition to its consumers or the like that sustain itself over a long period of time. And so,
but certain events may change the sectoral trend and the perception outside. Has that happened with jewelry sector, Vishal?
So I'll just give you 2 points. Look, jewelry sector, from an institutional investor perspective, not today. You go back for the last decade. Why was Kalyan built? Why do we like Kalyan? I mean, fantastic entrepreneurs, highest standards of corporate governance, well-run business, very different from the company you mentioned. Obviously, it's a retail consumer branded play in India.
Right.
But they built their business on a very simple premise. Trust is everything. That's their tagline. And they live and breathe that day in and day out. And I've seen it
Right.
ever since I've been involved with them. And their initial success was really driven by a simple marketing campaign that didn't even talk about Kalyan. All it talked about was, be careful what you buy, make sure it's genuine. Trust is everything. And that's what's driven people to the Kalyan stores. Trust is everything. They know that, we know that, and we have huge faith in Kalyan. We're obviously big fans. We think actually some of the things happening, keep the scam aside. As Chip said, there's noise, it comes and goes. Scams in India are not new. They will not stop, unfortunately. They will come and go. But for Kalyan Jewelers, the opportunity in that space and the shift from the unorganized to the organized, if you're doing business the right way, GST, demonetization, all of that should only drive an acceleration in the opportunity for them, and then it's up to them to take advantage to it.
All right. And one more question, Chip. Of course, we've talked about several deals that you've done, many successes you've had in the past, but with that also comes some failures in the deals as well. So Tata Technologies, you'd almost committed there, and then the deal failed. Any particular reason for that?
No, look, I think as Vishal said, we sort of never really want to comment on the specifics of anything. Tata's a group we've had a long-standing relationship with, and a lot of confidence and trust and frankly, admiration for the team there. So, sometimes deals don't happen, and that was the case here, but we look forward to finding many more things to do together with them.
Finally, I wanted to ask you and hold you to a number that you gave last year, $8 billion of investments in the next 10 years in India. Do you still stand by that? And how much of investments are we going to see in this year in India from Warburg Pincus?
I don't think we ever project or estimate things. I mean, that said, we said earlier, whatever, we committed or invested about $1 billion last year. And so I think, that we are very excited about what the opportunity set here is. And I'd be surprised if the next time we don't get together, our expectations haven't risen.
All right, so that will keep Vishal extremely busy for the year as well. Thank you so much, gentlemen, for giving us your time and for such an exhaustive, detailed chat on your portfolio and your strategy in India. Thank you so much.
Thank you, Nisha.
Thanks.
Good to see you.